European markets are heading higher on Friday and on track to book weekly gains. Meanwhile, US futures are heading higher and US stock markets also on track for modest weekly gains. In the FX market, the US dollar is trading around 0.5% lower across the week, marking its second straight weekly decline. Now, the market has been, in the case of stocks, boosted by expectations that the Fed will be cutting interest rates by 25 basis points next week. That's obviously kept the US dollar under pressure. Now, this week we've seen weaker ADP data, ADP payroll data, challenger cuts yesterday. We're also 71,000, so not as bad as expected, but that does mean that across this year we've seen 1.1 million layoffs, which is highlighting that weakness in the labour market. So today now attention is going to be turning to US core PCE. That's the Fed's preferred gauge for inflation, which is expected to remain steady at 2.9% year on year and 0.2% month on month. Any signs of sticky inflation will likely dampen expectations for rate cuts next year. In addition to the Fed, the market is also been very focused on what's going on in Japan. Japanese bond yields have been rising, with the 10-year yield trading at levels last seen in 2007 yesterday. Now, that combined with expectations of a December rate hike from the Bank of Japan means that there are sort of those lingering concerns over the unwinding of the Japanese carry trade. Now, with the Fed decision next week and the Bank of Japan the week after, the market could still experience significant volatility as we head towards the Christmas period. I think the big questions here are whether we see a hawkish cut from the Fed, which could offer support to the US dollar, and that would appease the more hawkish Federal Reserve policymakers. And the other big question is whether the Bank of Japan will hike rates, which is expected, is about 86% priced in, but whether it also suggests that it's open to further hikes. Now, that could spur a strengthening in the Japanese yen. Just having a look at the US dollar Japanese yen after rallying to a high of 157.90 on November 20, USD Japanese yen has fallen and is currently testing support around the 155 level. Now, a break below here would open the door to that 153 level, which is the 50 SMA. Should we find that 155 support holds, particularly if we have stickier than expected inflation data or a hawkish cut from the Federal Reserve, then buyers could be looking towards that 156 level. That's the December high, before bringing 157.90 back into focus.